In this video, I'm going to talk about profiting from panic selling. Stay tuned. Hey traders, a very warm welcome to you. So, we've all seen it, we've all heard about it. If we haven't seen it, I've been trading long, depends on how long you've been trading. Panic selling. How do we profit from panic selling? Okay, let's put this into perspective first. Now, we've got a couple of different types of panic selling. We've got literally market kind of crashes where the whole world is selling whatever stock or whatever market we're looking at, and it's just falling through the floor. We've got little mini kind of panics where we get little blasts through to the downside, and anywhere in between. So let's discuss. Right, the opportunity presents itself when people are trading based on an irrationality or an urgency. That's when we have opportunity as traders. And that often happens during so-called panic selling. But what panic selling really means, let me get a different color pen for you guys. What panic selling really means is forced selling or lack of liquidity. Let's talk about each one first. So forced selling is, on the very kind of minor scale, it's a group of retail traders who are forced to sell because they're in a too big a position, the market's gone down too far and it's executing stops. You see that pretty frequently on things like DAX, crude oil not so much, but anywhere, gold, if it goes through a key level, anywhere where you know a lot of people have got stops. You know, that's forced selling because they have a stop loss there, it's going through, and there's a bit of a wave of panic, it's a bit of irrationality. You know, everyone at that point in time, or more people at that point in time, is saying, get me out, I don't care about price, which is ultimately what a stop is unless you're using a stop limit, but generalizing, get me out, I don't care about price. That presents us with an opportunity. Now, if we go even further on the scale and we say, okay, forced selling, let's imagine now we are in a bear market. Let's look at the flash crash in a second, it's quite a unique thing. But let's imagine we're in a bear market now. For whatever reason, hedge funds have got loads of positions, pensions, blah, 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 all that kind of stuff. We are getting a situation where people are forced to sell regardless of the perceived value of that stock. You know, they get a phone call from an investor who says, listen, my bank has just pulled in my business loan for 25 million. I need my 25 million out of your fund. I need it quickly. Puts down the phone. That fund is going to have to execute that 25 million, whatever the price may be. It's forced selling. You extrapolate that out with 10 funds or whatever, all of a sudden you've got a decent amount of money, forget about the numbers I'm using, but decent amount of money coming at you one time. It's forced down the chain of command for whatever reason. You know, they're not selling that index or that basket or that ETF or whatever it may be purely because they think that it's going down. They're selling it because they have to sell it. And it's the same with, we've had all sorts of scenarios like this. Like we have scenarios, unique ones where we've had big investment funds and hedge funds go under because they've had margin calls on positions. So in other words, you know, they've said, hey, you've got a margin call on this position, it's too big, and they've had to liquidate stock positions or you know, commodity positions to fund that. And that again is forced selling. So we can profit from that if we spot it. Now, of course, easier said than done. If we're in a bear market, if you're buying the very first day you see panic selling, you're going to get annihilated. You have to kind of know when the sweet spot is, and even that's on a short-term time frame. You have to know when that panic has kind of run out and the forced nature of it has gone, and the difference between those forced flushes that we see and kind of stepping down, selling systematically, and how long that's going to go for. So we can definitely profit when we see panic selling and it's in a forced nature. And if we look at the flash crash, you know, that was being driven down allegedly by, you know, a rogue algo pushing the market down. However, it was a lot of market makers who were stuck in positions, and they were, you know, they've been buying it. That combined with hedge funds unloading, that combined, you know, gave us this pressure to the downside, a forced reason. Not any of them thought it was going lower. Sure, a couple of traders probably jumped on the short side and made a bit of cash on it, as they did on the long side, but no one perceived or thought this is a good short because I'm selling because I feel it's a good short. They're selling it because they're forced to sell it, which brings me on to the second part, which is liquidity. Liquidity, it plays a huge role in this, guys. If you've got a big amount of sellers and you've got no one to soak up those sells, it will just go through the floor. And I've seen this in the bear market, even in equities, when I've been trading, looking at level 2 screens, London Stock Exchange, just bids disappearing. You know, you just can't sell hardly anything. If you want to sell any size, forget it. You know, and someone comes on with a little bid, it gets hit straight away. You know, that is what's causing this volatility and this panic selling. People are concerned. What's happening? Is some news coming out? What's this? What's that? And again, the combination of being forced to sell and the lack of liquidity is causing these issues. And you see this even when you go through kind of lows daily on the DAX. Not every day, but you know, let's say once every couple of weeks, or when you're really active, we do get it every day. If you can imagine a low here, market comes down to it, pushes through that low, because the liquidity just dries up. You've got a lot of people smacking that bid with those market sells with disregard for price, which brings opportunity for us. A lot of people are pulling their bids because they're seeing this wave. You know, a lot of people also understand that that's going to happen, pulling those bids. So we see that big panic move that kind of comes and then runs out of puff, and we get a continuation and we get a bounce back. So, you know, panic selling here, I've defined it as a couple of things, either the broad overall, hey, the whole thing is panicking, like we had at the Brexit. It was all panic on day one, and then all of a sudden the liquidity wasn't there. If you dived in at the open and bought a load of basket of shares in the UK on the day after Brexit, you'd be doing very, very nicely. That was a bit of panic, people assuming something was going to go wrong. Perhaps they were forced to it, perhaps they'd had orders that said, hey, if Brexit happens, I want to, you know, slash the position size by X. Obviously, I think if we'd have gone further with that, it'd be interesting to see if they continued selling. As it popped back up, they probably held off and only sold a few down there. But, you know, panic selling on a broad scale of, hey, the whole market's going down for days and weeks or whatever, or on a small scale, very similar, but obviously you've got to extrapolate out into the time frame that you're working with. So profiting from panic selling, yes, but my tip here is to look at the difference between the forced selling and low liquidity, which is where the opportunity lies, and this constant kind of sell downtrend that you'll see on many stocks, many kind of just normal downtrends. There's a distinct difference. And when you spot that difference, and generally it's the speed of execution, it's the speed of move as well. When you see that, then that's the opportunity comes in. Even on a short-term basis, you see it kind of on a 1 or 3 minute chart. On a longer-term basis, you'll often see that kind of real flush, a brutal day, heavy down day after a long trend, heavy down day. Everyone's just forced to the last thing. It's that uncle point. It's the point where they have to maximum pain. And then you kind of see what happens the next day, and it consolidates, and then potentially there's an opportunity. And especially, it's the last thing, if we're talking about that last thing, panic selling, guys, whenever the media is bearish and is just all over saying how bad stuff is, then that's the time you kind of look a little bit closer. It's the classic one, isn't it? You know, when the newspapers call it the bottom, when the newspapers call it a crash, it's the bottom. But, you know, again, it's the same kind of principle with it. So anyway, guys, something to think about: forced selling, lack of liquidity, good little combinations if you can spot them that create opportunity for you. Obviously managing risk as always on these kind of things, but there's always opportunity out there. Anyway, guys, take care. See you in the next one. Bye-bye.